Ladies and gentlemen, up next is the industry dialogue on accelerating investment in connected energy systems presented by TotalEnergies. It is my pleasure now to invite on stage Dato Razib Dawood, ASEAN Center for Energy, Mr. Pascal Radue, Nexans, Mr. Grégory Thomassin from TotalEnergies Renewables Asia Pacific, Mr. Michael Boardman, Gurin Energy, and Sharad Somani, KPMG in Singapore. And of course, moderating this session is Mr. Birribi Dillon, Export Finance Australia. Mr. Dillon, please. You're all welcome on stage. We're ready to go.
Thanks, everyone. So my name is Birribi Dillon. My role is Head of International Partnerships and Development at Export Finance Australia. I'd like to welcome you to this session on accelerating investment in connected energy systems. Successfully developing cross-border energy infrastructure requires innovative financing approaches, robust business models, and effective risk management strategies. Given the scale of energy sector investments needed by 2030, mobilising capital for regional interconnection projects has never been more critical. This session will explore the challenges and opportunities of investing in cross-border energy infrastructure. The discussion will examine successful investment frameworks, risk mitigation strategies, and innovative business models that can accelerate regional energy transition. So I'd like to welcome our esteemed panellists. They've already been introduced, but I'll just highlight that among our panellists, we're lucky to have representatives from TotalEnergies and Gurin on the panel, noting that they've been shortlisted in the live Singapore EMA import process. These projects are perhaps amongst the highest profile cross-border energy projects in Asia at present. But in terms of framing this conversation, it's important to note that the focus of today's discussion is on cross-border energy infrastructure in general, rather than the Singapore projects. So to kick things off, I'd like to thank TotalEnergies for sponsoring the session and perhaps ask Greg the starting question. How does a global energy conglomerate like TotalEnergies look at cross-border energy projects in the context of its global priorities?
Okay, sure. So TotalEnergies strategy is based on two pillars, oil and gas, in particular LNG, and we're also developing an integrated model called integrated power strategy, which aims at replicating our oil and gas business model into the electricity value chain. So the upstream, midstream, downstream with the development of renewable energy projects, the contracting with corporate clients through corporate PPAs, and where it's possible, some trading and retailing of electricity activities as well. So for that purpose, we are developing a global portfolio of renewable projects, but also flexible power projects so that we can deliver what we call clean energy power to our clients. So the objective is to develop up to 100 terawatt-hour of global electricity production in the world. 70% of which will come from renewable projects, 30% will come from flexible assets. And so to implement this integrated power strategy, we are focusing on countries where the regulation allows us to do so. Regulation is very important because in not every country you can move down the value chain of this electricity sector. And so we will develop bulk of the 100 terawatt-hour in countries such as Western Europe, the US, and Brazil. But we are also actively pursuing high-value opportunities in other countries where we can, at least partially implement this integrated power strategy model, i.e., at least enter into corporate PPA model with our clients. So, as an example, you mentioned the projects we're developing in the context of the cross-border between Indonesia and Singapore. So we've received conditional license, from the EMA in May last year for a project we're developing with our partner RGE. So very large-scale solar plus battery projects, which purpose is to not only meet the local electricity demand in Indonesia, because the generation would be based in Indonesia, but also to export some of it to Singapore, and therefore to meet some of the demand from our global customers in Singapore and deliver clean, firm power solution, as I mentioned before. So it's a very good, this project is a very good example of what we do as well, and where TotalEnergies has a real value add because of three main criteria. The first one is the scale of the project. To deliver 1 gigawatt AC of clean firm power in Singapore, we need to install half a dozen gigawatt peak of solar in Indonesia and 1,000 of gigawatt hour of batteries in Indonesia as well. So the scale is important. The technical complexity as well, and this is where TotalEnergies really has value add as compared with some of our other competitors. Is we can leverage the technical knowledge and the technical know-how of the company to develop those technical and complex projects in terms of hybridization, subsea cables, and constructability as well. And the last one is the fact that this RFP from the EMA allows us to provide clean firm power, as I mentioned, in Indonesia to our local customers, but also in Singapore for some of our global customers that we've signed corporate PPA with that have very large electricity demand and a thirst for decarbonization out of Singapore.
Thanks, Greg. And I think it's important to acknowledge the important role that global energy conglomerates like TotalEnergies will play in the energy transition with their renewable investments. The second question is for Dato Razib. Dato Razib, could you give us a sense of the potential scale of investment in cross-border generation projects across Asia?
Thank you again. Thank you for inviting the ASEAN Center for Energy. I'm going to give a very short answer to that. I'm going to explain a bit more on the new effort on APG. We have done studies a couple of years ago. This up to 2040 alone, the investment required around 250 billion up to until 2040. Yeah, interconnected as well as some generation in 10 ASEAN member states. But beyond that, if you go all the way to 2050, it can go up to 4 to 5 trillion US dollar requirement.
Wow.
So this is a super mega project. But again, I'm sure there are many people here want to hear more about what the political commitment that been endorsed in Kuala Lumpur a couple of weeks ago during the ASEAN Minister of Energy Summit. So as Minister mentioned this morning, Honorable Dr. Tan, on new enhanced MOU of APG, I think the ground have shifting from, we been talking about this APG. This idea was, APG was conceived many decades ago, but 30 years ago. Yeah. So we are shifting from, aspirations and targets to implementation, toward this execution. Yes. So the next MOU, we're going to focus on setting up, task forces, looking specifically on harmonizing regulatory and policy, legal aspect, and the other group going to focus more on technical, harmonizing standards and so on, Greek code, and the last look at the commercial aspect of this big project APG. So that number one. Number two, we are working hard on finalizing what we call, Minister Dr. Tan also mentioned on submarine cable framework. Yeah. Yes. So that's very important ingredient to implement this APG project. And number three, not to forget this certificate, so renewable energy certificate. Yes. So we are, of course, going to deliver under Philippine next year chairmanship, what we call a framework that acceptable to the 10 ASEAN member states. I would like to elaborate a bit more on this formula of 30, 45, and 40. Minister mentioned 30% of total primary energy. Those are the target. Within 5 years, by 26 to 2030, the total primary energy for the 10 ASEAN member states will reach a 30% target and 45% on installed capacity. What it means of 45%, we're going to have around 700 gigawatts of new total energy mix for ASEAN. So 45% of that, close to 350 megawatts. So that's massive. Annually, we should add 30 megawatt,
Yes.
30 gigawatt, not megawatt. This I beg your pardon, 30
Yes.
gigawatt. That's a massive investment requires. Yeah. Again, so the marching toward this energy transition is continue, as
Yes.
You mentioned, unstoppable, irreversible. We are here also in this region. We are marching toward carbon neutrality and carbon net zero ambition by 2050 and 2060. So so what's different? The high political commitment. So what we have to do now just to implement those projects. We have proven this pilot Pathfinder, LTMS, PIP. Now we're going to emulate this in Borneo between Brunei, Malaysia, and Philippines and Indonesia. Yeah.
Right.
Again, execution. Are we here? This
Yes.
political risk is one of the biggest, if not
Really.
the biggest risk. So we want to make sure we have, as Undersecretary from UAE mentioned, on consistency in the policy, in the stability in this regulatory framework is very important to
Yes.
give the right signal for this investor to put this massive amount of capital in this mega project of ASEAN. Yeah.
Yes, that clearly with that scale of invested capital that's required, the political and the geopolitical support.
Yeah, before, I forgot to mention that we also launched APGF financing facilities, ADB, World Bank and ADB. So we're looking at the blended finance, so
Yes.
to de-risk all this investment.
Okay.
Of course, we'll invite the private to participate in this initiative by World Bank and ADB.
That's very important. I'll ask you about that towards the end of the session. Thank you. Maybe to turn to the first scheduled question, what are the key investment considerations and risk mitigation strategies for cross-border energy projects? I'd like to turn to Pascal from Nexans. Perhaps you'd like to have first crack at answering that question, Pascal.
Yeah, so just to put it in context, when you look at risk from a cable manufacturer's point of view, these cables we're putting in there are big, and the process is a continuous process that you have to run in the factory. And if that process gets basically interrupted by a permit that's missing or financing that's suddenly missing, that's a massive risk for us. And it's a risk for the company because these projects are very, very large. And if you think about the manufacturing process, it's like a ballet, it's like a symphony. It all has to happen at the right time. And if you have one part of the process which is interrupted, then it will have an upstream and a downstream basically effect on every single other project we have. So it's a massive risk for us. So I would say the biggest risk we have is really being able to predict whether a project will happen or not. And that is linked to, and we've heard it all, it's linked to financing, it's linked to permitting, it's linked to having the right regulations, and last but not least, it's linked to geopolitical cooperation, which needs to be smooth. And I think here the mitigations that I can see is a single-minded focus on transparency and collaboration. Because I think when I see everybody being transparent, sometimes maybe a permit is going to be late. Sometimes maybe financing will be late. Then I think everybody can plan for it. And I think that's the kind of two things I would really advocate for is a focus, a real focus on collaboration and transparency.
Thank you. And clearly it's important for the projects in ASEAN to be securing their place in the cable supply chain. My understanding is there's a limited number of suppliers, so it's critical that that these projects are able to resolve these issues, provide that transparency to get in your queue.
Absolutely. So just to give a feel for that as well, the cable industry, we are planning for projects in 2029, 2030 now, because everything else is already. This ballet has already been, the script has already been made for that.
Yes.
I think that's it's very important to consider.
It's a global environment.
Absolutely.
Maybe the same question for our equity investors and developers. Maybe first to Greg. In terms of the investment considerations and risk mitigation strategies, how do you see that question?
Yeah, sure. I mean, I think you have to differentiate two moments in the projects. The first one is, all the risk you're taking and you're mitigating before you make an investment decision. And then the risk that you have to manage after your investment decision. And hopefully, your investment decision is the moment where you're comfortable with the risk. People call it bankability. I call it investability. So just focusing on the pre-FID risk from our perspective, which is the most uncertain time, really, because you're basically starting with a blank page, and you have to come up with the projects, in particular when you're talking about cross-border projects with a lot of unknown. So you have to strategize and plan for how are you going to solve your unknowns one by one in order to spend your development budget, which are significant in those projects, so mega scale projects. We're talking about millions of dollars of development at risk. So there are three kinds of risk and how you can mitigate them. The first is technical. Can you really build those projects where you are? At what cost is the most important? What's your LCOE? What's your technical cost eventually? And for hybrid projects, cross-border projects, it's not an easy answer. Sure. Solar PV standalone in some jurisdictions, everybody knows what's the LCOE of a project. I mean, it's a $1 billion question as to what's the real LCOE of those projects. It takes time because you need to design, you need to do some procurement, you need to work with your contractors as well to de-risk. So what's your LCOE? And then you need to test whether your LCOE actually match your commercial risk, i.e. what's the winning buying price in the countries in which you want to sell, in this case, Singapore. And is there a gap between your LCOE and your winning buying price? And how do you, lower this gap so that you have a winning recipe? Because as Minister Tan said yesterday, I mean, the transition will not happen at any cost. Even the so-called high-paying customers, hyperscaler data centers, will not pay too high price for their electricity, even in Singapore. So how do you deal with that? Through consultation with the markets, through some collaborative approach with some of the global customers that we have, etc. And the final risk is G2G, obviously, regulatory risk. And I think the best mitigation strategy, obviously there is a role from both government sides to align. From a project perspective, you have to make it such that it's a winning proposition from both sides of the borders in the long term, right? In terms of FDI, foreign direct investment, in terms of job creations, in terms of local content of some of your equipment, in terms of the involvement of some of the state-owned enterprises of both sides of the border, etc. And in terms of, in the case of Indonesia, which is very important, in terms of helping them achieve their decarbonization goal locally as well. You can't assume that Indonesia will support in the long term projects to simply export to Singapore. That's not possible. Okay. So how do you mitigate those risks? You work with governments, you work with multilaterals, but also at the project level, you ensure that you have the right price, so that it's sustainable for your customers, and you have the right value proposition for the countries in which you're operating.
Sure. Thanks, Greg. And Michael, did you have anything to add as another investor perspective on that question?
I think clearly Greg's done his homework and he's extremely experienced. I think there are some key issues, not just in Indonesia, but whenever you undertake a project like this, like renewable, especially if you're talking solar, land is going to be a big constituent of it, especially early on. And that land control, especially, and making sure that in terms of the regulatory and legal in that country, in some countries you can take control of land, in some countries you can't. There's even now developing new laws in certain jurisdictions. For example, in the Philippines, there's been some further developments in respect of land. And you've got to comply with all those local regulations. And on top of that, you've got all the ESG-related issues with land. Greg was also talking about tech studies, and those are going to be a major part of the cost. But at the end of the day, you know, the permitting and your counterparties, whether or not you can match them in terms of what they want to pay, but also in terms of what their credit is. And finally, you know, it all comes down to you have to put all that into a model and make sure that your assumptions are realistic also in terms of the financing. So I think the financing, because so much of these projects are done via debt, making sure that your project is bankable is the biggest risk mitigator that you have. And that's the key. And I left that to the end because you can do the most wonderful, you can put the most wonderful assumptions, you can get the best design, but if you can't bank it, you've got a problem.
It's music to my ears as a financier. Great to hear that understanding on the development side. And it's a great segue to turn to Sharad. So Sharad, the next question for you was, how can innovative investment mechanisms and business models help accelerate the regional energy integration? You can probably talk a little bit about what's required for successful financing there as well.
Yep. So first of all, pleasure to be here. Thank you for inviting KPMG. So I think for connected energy systems, I would say we require 3 C's for that. One is, of course, we require certainty in terms of when the project is going to happen, the timeline, because there's a fair bit of uncertainty currently in the market into which projects will happen, when will it, what's the time frame. So the market is needing a lot of certainty on that. The second is, of course, credibility of the announcements, programs, plans about projects, to ensure that market is not confused about which project, when will it happen. So credibility of the countries coming together and announcing programs in an integrated fashion is very important. And the third C is consistency. We are looking for some consistent frameworks, whether it's grid codes, regulations, charges, tariffs. The market is looking for a more integrated, consistent approach to this. Now, coming back to innovative financing, fact of the matter is most of the big projects in the region have either been funded through sovereign financing, or it has been funded on corporate balance sheet, or we have long-term sovereign offtake contract-based PPPs, which are conducive for project financing, right? Now, we probably are now getting into uncharted territories where we are looking at a mix of various things, where we have competitive market, we have multiple PPAs potentially being signed, and then we're hoping that the bankability will happen based on those PPAs which are distributed to different risk categories of consumers. Now, this would entail that we'll have to come up with innovative options, and there's no dearth of financing options, I must say. When we look at financing options apart from commercial banks, multilaterals, we're already talking of blended financing quite a lot, so a lot of foundations, capital coming in. Capital markets as a source of financing, green bonds potentially could be considered, and of course, carbon credits and market-based mechanisms. So there are multiple financing options which are available. So if you have to fill up the capital stack based on the different risk allocation of these projects, we have even enough avenues. The question I guess we'll have to answer at this point in time is the ability to first break the cycle which exists between the buyers wanting certainty on projects and projects wanting certainty of offtake. And how do you break that will be important. And this is where I believe that some kind of government intervention would be important, because this is not a pure private sector project only. It is a hugely important project for decarbonization, energy transition, and energy security for the whole region. So governments will have to get involved in some fashion to de-risk the project. In that regard, I must say there are a lot of initiatives which are happening. For example, there's a significant infrastructure government loan act in Singapore where government can borrow to fund significant infrastructure projects. The FAST-P initiative, which was discussed in a couple of sessions by MAS, where Australian involvement is there in terms of $150 million US to be put in to put some kind of blended financing, transmission grade financing kind of stuff for renewable energy projects would be important. And of course, there's an announcement of Future Energy Fund as well for critical infrastructure that is set up in Singapore. And I think some of this institutionalized mechanism involving government funding could be potentially required to break that circle of how to make it happen. I believe that certain infrastructure, and we talked about the ASEAN power grid, some of this, if you talk about the Singapore import projects, some of this will be the stepping stone for creating the ASEAN power grid. And in that regard, I believe that will be important that some of this infrastructure is actually built in partnership with the utilities in the region. And that would be fundamentally important. I mean, Singapore has taken the step in terms of creating that entity through the Singapore Energy Interconnect. Will require some of this partnership to happen at a G2G level to at least take care of the transmission infrastructure, which will be very, very fundamental. On the generation side, I think it's critical to observe that there will be local content requirements. We'll have to ensure that there's enough supply chain available to meet those requirements. There's investments happening as on ecosystem-wide basis rather than just looking at an individual project. So number of, let's say, 8 gigawatts are announced. We have to see how that ecosystem is actually developing. It will be important. And on the last point, which is the most important on the bankability side, to bring some financing on the table would be, we may sign a lot of CPAs, the corporate power purchase agreements, but it will be critical to have some kind of backstop, some kind of potentially a buyer of last resort should some of those PPAs fail at some point in time. Because we are looking at a 20-year financing. It will be, to our mind, and being advisors to a couple of import projects, we believe that it will be very difficult to convince about the bankability of those financing unless you have some kind of backstop in some fashion. All these large-scale, multi-billion-dollar infrastructure projects have, in the past, various jurisdictions, including Europe, has some kind of comfort in terms of regulatory asset RAB models or floor and cap pricings. And those things we have to incorporate in the system in such a fashion that will lead to financing. So I don't see challenge in financing. It's more about structuring and helping put the capital stack in a proper fashion.
I think that's a really interesting observation, particularly for where there are markets that don't have established merchant markets. In Australia, we do have a deep merchant market if a PPA falls away, but what does a project do if the counterparty defaults on their offtake agreement? So, and maybe just to turn to Michael, have you got anything to add in terms of your view on the potential financing options that are available to a project like yours?
Yeah, I take a very pragmatic approach to this. And in my view, I mean, first of all, there is significant financing available of different types. It is important that you need to spread out the, not just go with commercial banks or not just go to multilateral. There is a whole range of financing tools that one can use, not just about the type of institutions, but also type of debt. And certainly, I don't think we need to reinvent the wheel. Yes, the scale is significant, but by going wide and going deep in terms of stacking the different type of financing needs, we can get there. And certainly over the years, financing has been the least, and talking to others as well, has been the least of a problem, especially in this sector, where you have a whole raft of institutions actively wanting to participate. And where you have had problems with financing, it has been because the transactions had a problem, because the structure wasn't right, or because the offtake agreements had faults or issues, or because there were timing concerns and so on. If structured properly and with the right, I won't go as far as suggesting backstops, but with the right structure in place, you can definitely get the financing. And you've got ECAs, you've got multilaterals, you've got commercial banks, DFIs, and they're all willing to play on a slightly different range. So to me, this is not an issue.
Thanks, Michael. And we might just shift tack a little bit now and turn to the commercial and technical challenges for some of these projects. Maybe to return to you, Pascal. Noting the technical challenges that undersea power cables that I've seen, like Basslink in Australia, have faced, are there technical challenges that you see that need to be resolved to progress some of the projects in Asia?
Yeah, I think the cable industry as such has moved leaps and bounds, I think, to assure the technical soundness, both in when we construct these cables and during the kind of operation of the cable. So I think we've learned a lot. I think we've learned to use technology to look at the problems we have, and I'm very, very confident now that we are progressively solving those and really can provide a product that is really giving the reliability that we all need at the end of the day. So I'm very, very confident that this basically addresses the challenges that you were referring to, which we also had not just in the Basque Strait, we had them in Europe to a certain extent as well. But I'm very, very confident that we've moved the needle significantly on that issue. And then there's the other part of the technical challenges of the cable itself. I mean, frankly speaking, it's a mature technology. It's not the most straightforward product for sure, but I think the industry really masters the technology regardless of the depth of the cable, of the kind of environmental circumstances that the cable basically may see. So I'm very confident that technologically, the challenges are being addressed, I think, very, very significantly.
That's great to hear. And what about in terms of the queue for cable supply? Do you feel confident in the sector's ability to deliver on the cable supply in Asia, but also globally?
Look, we see a queue. You can call it a queue. We are pretty. I think most of our friends as well in the industry are pretty booked out till 2028, 29. But to a point that you made, Greg, that this is maybe just to illustrate what I mean by transparency. Is also the cable industry needs to be transparent when there's slots available, and we need to be much more proactive to you guys in providing that transparency. Because what I see when I see that we're lacking predictability sometimes is that I think the cable industry has given the impression that everything's sold out. Then people rush to buy cable without having their ducks in a row. Fundamentally, the finance is missing, or some of the permits are missing, whatever, and then we get this unpredictability. And I think that's what it's a really nice example. I think where I think we need to be a little bit more transparent as well to make sure we get this predictability.
It's an important point.
And it's a constant communication between all parties.
Yes,
which I think is the key here.
and it's that uncertainty that makes it difficult for all counterparties if there isn't that transparency. Maybe back to you, Sharad, in terms of the commercial solutions that might be taken, is there anything you would like to add in terms of how we solve this?
Yeah, one thought on the financing part of it. I think we also probably need to look at standardization of contracts. The number of PPAs that are existing in the market, people need some clarity on what would be bankable, what is it that we are asking the hyperscalers or other big off-takers to sign. Some kind of consistency, standardization will help the market quite a lot. And of course, that will also help the banks to ensure that they're comfortable with those contracts that they are signing. I would also add that all of us will have to put our thinking hats to be more innovative. No option should be off the table. We should explore all the possible options because this is really mega projects. We are getting into uncharted territories, and effectively we'll have to think through a lot of options, including new models for risk allocation potentially will be important. I also believe that the role of the EPC contractors or the equipment suppliers will become very, very important in terms of what kind of risk they can help mitigate. I think the risk cannot necessarily lie only with the equity and the debt players. We'll have to ensure that the risks are properly distributed across the ecosystem, including the governments, regulators, equipment suppliers, all coming together as equal stakeholders to make the project happen. And eventually that will lead to WACC optimization, which is what the objective is, right? Bring down the cost of delivered energy to a level which is comparable to the current cost of electricity in the current market. Based on whatever numbers we have seen, we are still talking of 40 to 50% more expensive power coming in, which will be difficult to justify from the bankability perspective. Yes. So how do we optimize WACC is very important. So just to summarize, I'm drawing the leaf from Minister Tan's speech yesterday. So my four things are SIU actually. the standardization of contract, innovation, equipment supply, and WACC optimization.
All very important points. Thank you, Sharad. Maybe to turn back to Dato, Razib. These projects are very important for local industries and the communities in which they're developed. Can you talk a little bit about how they can contribute to the local communities and build the case and the rationale for why governments should support them?
Look, I want to respond quickly to Sharad. I mean, the backstop, the idea. I think it's not impossible to have a ASEAN government guarantee or this massive project. We talk about this, possibility that, government giving guarantee. I agree with you, utility. You look at all ASEAN member states, almost all utility, government-owned utility. So they give, de-risking this massive project, and benefits that we are getting from this. Undersecretary UAE mentioned about avoided costs. If you interconnect between 10 ASEAN member states, I think we run the numbers as massive billions of saving, by sharing the resources. So you asking about this spillover economics impact and so on. There's huge money required to to construct these poles and cables and wires and so on, substation and so on. Obviously, that's a direct impact on the economic and social for local industry. But again, between this energy security and affordability and sustainability, I think emerging top priority is energy security. So the cost of blackout is, I don't know how much Spain lose their money. It's massive. So by having this integrated APG, we can actually enhance energy security. So that gives benefit. The other important benefit is certainty on fuel costs. You can't predict the oil and gas, coal price in future, but having renewable energy integrated, sharing hydro from Laos and wind from Vietnam and solar from Malaysia together, so we can basically hatch our future energy.
It's clearly clearly important that those benefits are well understood at the local level and at the regional level to build the political will for some of these.
The costs of energy. We can contain.
Okay. And then that raises the question then about how stakeholders, both public and private, can work together to create more integrated and resilient power markets in general.
Yeah, we have this roadmap. I think the end game have to be market mechanism. So we're going to design market. We're going to benchmark the Gulf country and of course the European market and Scandinavian market, even South African market. So we welcome the participation of the private on this, how we're going to shape up this market mechanism in future. But of course, talking about ADB and World Bank participation in blended finance. So welcome the private banking and private equity to participate in this financing aspect of this funding of the project. So we can't do it alone. So this is huge capital that require. So you have to be partnership with our dialogue partners and ASEAN and regions as a whole.
Understand. I think those are really important points, and that collaboration between public and private sector is very important. Maybe just before we finish up, I might give the opportunity to each of our panelists to provide their thoughts on what they'd like to see in terms of initiatives to move this process forward. Maybe to start with you, Pascal, what would help Nexans and, I guess, from your perspective, solve some of these solutions?
Yeah, I think for me, I will come back to this kind of what I like to see from the wider industry is really that single-mindedness of transparency and collaboration. Because we've heard a lot of very, very good concepts, but at the end of the day, they need to be translated into real projects. And I think this is where the rubber basically hits the road, where we need to just remember that only with open collaboration and transparency can we really get the best out of each other. I think that's the one thing I'd love to see more.
Greg?
Sorry, the question is what we'd like to
Just
see.
any final thoughts on what you'd like to see in terms of collaboration between the private and public sectors to make these projects more viable?
Well, what we'd like to see is our projects FIDing as soon as possible. You know, I mean, talking about Indonesian-based project. So, you know, I really think that they are, I wouldn't call them the low-hanging fruits, but they are probably the easiest to implement in the context of the ASEAN power grid. So, you know, if we want the ASEAN power grid to be a success story, I think I'd like to see our projects coming off ground. But for that to happen, I'd like to see in the short term the regulations and the conditions at which Indonesia would be eventually supportive in this whole scheme.
Of course.
Because, you know, once we have that in hand, we know what we have to play with, and we can shape, we can structure, we can allocate risk, but it becomes more of our decision rather than, you know, waiting and depending on something we don't really know at this
Yes. Michael, do you have anything to add from your perspective?
I think just going back. And
Michael would like our project to come off ground as well.
I'm just looking at the time, and I've run out of time anyway. But just to continue on that and the Indonesian projects is to make sure that everything that Greg said. But on top of that, I think if you are going to try to develop some kind of power interconnection, I don't want to call it power grid, but certainly in connection between countries, there has to be some ground laying rules or some ground laying rules that people can use to develop that.
Thank you. Sharad?
Yeah, just to have the investments attracted to connected energy systems, I think we still need a fair bit of certainty, credibility, and consistency, which will be very fundamental to drive. And this all can happen if the different governments start trusting each other a lot more, regulators start trusting each other a lot more, so that we have credible action plans to deliver.
Thank you.
1 second. If you have a financial capital and political capital combined together, that would be perfect.
I love it. Thank you very much. I'd like to take the opportunity to thank our esteemed panelists. Thank you also to IRENA and to TotalEnergies for sponsoring the panel. Thank you all.
Thank you.
Thank you.
Thank you once again to all of our distinguished speakers. At this time, could I have all of you gather in the center for a group photo together first? Excellent. Very insightful, informative. Cameras right here. Take a picture together first. Got it. Thank you so much.